the local bourse. Strength to strength,
Yeah, looking good. I mean, today,
33,700.
Today, a couple of interesting movements. Impala was up after the fall it did when the chief executive resigned there and left the company. So that was the top of the top 40 list. But I suppose the other big interest news, the gold shares got a bit hammered today. I mean, they occupy the bottom of the top 40 list. So they came off quite a bit.
Harmony's down 3.8, Goldfields down around 2 as well.
You know, we saw the gold price down at 16.45 earlier on today. It's picked up a little bit now. But that, coupled with the rand remaining stable, gold shares took a bit of a hammering.
Would you say this is an opportunity to head into the gold stocks, given the fact that they have been losing ground, even in December, because the gold price was also losing ground in December. It was down 10% for the month.
Quite frankly, I never know what to do with gold shares. You know, they're very difficult. The gold price has run massively in rand terms, but still the mines battle to make profits. The bottom line is that there's not much gold left in South Africa, and what's left is very, very deep and difficult to get at. So in essence, the cost per ounce of gold mined has kept pace with the rand price of gold.
Yeah.
So the margins are very slim still.
Let's touch on implants. It's up 3.5%. News that David Brown, the CEO, is stepping down.
Yes.
Quite a bit of speculation as to why. We know that there's trouble still with negotiations in Zimbabwe.
No, I think the politics just got to him. I just think he said, I'm not running a mine anymore, I'm playing a politician. And I think he eased off. Look, Impala, if you look at Amplats today, Amplats came up with yesterday came up with a very poor trading update. And this loss of production because of stoppages is going to be throughout the whole platinum industry. Every platinum miner, when they come up with their production numbers or their financial results, are going to say we've lost X number of ounces because of stops.
And headline earnings per share for Amplats is expected to be as much as 35% lower.
Yeah, look, there's a little bit of accounting issues in their BEE and prior year.
It's a 3.5 billion rand deal.
Yeah, but it was still nevertheless way worse than the market expected, what Amplats said. And as I said, these production stories are going to leak over into all the other platinum mines. So platinum shares in the last 2 years have probably been the worst performing main sector. And certainly we have been looking at platinum because the shares are starting to look like reasonable value. But after today's Amplats announcements, probably still too early to go into the
This is my point that I actually wanted to make. In 2011, we actually saw a very dismal performance relative to the other sectors when you look at the platinum sector.
I think 2010
and some say
as
this
well.
is the time to buy into the platinum sector.
Look, if the platinum shares carry on falling, you would look at it. Simplistically put, 2 years ago, the platinum price earnings ratios were 25, 26. Now they 15, 16. So they are showing more value. And of course, platinum is the one strategic material where our stock market has got a clear advantage. I mean, we are the world's big platinum producer. And the demand for platinum is not going away at all. It's just a question of can they meet production targets and can they keep costs under control? Because certainly in Amplats' case, the cost escalations were bigger. I mean, they got electricity and labor.
With regards to Shoprite, also it was the second worst performing stock today. It was down around 2.7%. And turnover for the 6 months to December up around 13%.
Yeah, no, it was good results, but the share price may be anticipating more. Look, let's talk about the whole retail is going back now a couple of years, and specifically 2010, they were very strong. The foreigners own these shares. Their local institutions don't own these retail shares and haven't for a good year or two. Now, what happened is on Monday, Clicks and Truworths came out with their trading updates, and although they were good, they were not what people were expecting. And foreigners have looked at this lot, and they're voting a bit with their feet now. These retail shares could come under a bit of pressure in the next week or two. Maybe then it'll be time to buy them, but not yet. You've got to sit back. And actually, as I said, you know, when Clicks, but when Truworths and Clicks came out with their results, the shares were just down 5% almost instantaneously.
It's still not time to buy, even though retail sales number for November was not that bad.
It was good, but the problem is the shares are 25 PEs. You know, when you get good numbers coming out and the shares are 15 PE, you can buy it. But when you get good numbers coming out and the shares are 25 PE, the market actually wants excellent numbers, not just good numbers.
Well, it's interesting because Clicks posted an 8.1% increase in sales for the 18 weeks to January. So I'm sure double-digit numbers were expected there. Yeah,
but look, 8% will translate into more than that in profit growth. But you need to feed a lot of shareholders at a high PE. They demand big returns at those PEs. I mean, you don't even talk, Massmart's got a 40 PE, and I just don't get that.
And Massmart is sitting at 183 Rand.
Just don't get that one.
Do you own Massmart? No. With regards to, I mean, we spoke Truworths, Foschini would obviously be your stock pick.
Yeah, Foschini looks reasonable, JD looks reasonable, Spar still looks okay. Pick n Pay, we buy the turnaround story, so we heavily invested in Pick n Pay, but the rest, quite frankly, we don't own.
Exaro's foray further into iron ore.
Well, there's mixed news there. A lot of people were expecting...
Exaro's up around 0.8%.
Oh, no, look, Exaro's done well since this announcement. A lot of shareholders were expecting capital back, but it looks as though they're investing their capital wisely. And I suppose at the end of the day, resource companies should invest their capital. They shouldn't actually pay it back to shareholders, but they mustn't make bad investments, as we've seen. And unfortunately, maybe they're a bit better this time around, but unfortunately the trend is they buy at the top of the cycle. So when you want to know when the top of the cycle is next time, wait for big resource deals to come through, then you know you're at the top.
And banks doing really well this week. Any specific reason?
We've spoken ourselves hoarse about banks over the years. Banks look reasonable value. We're getting a bit of payoff now on them. Do you own a banking share at an 11 PE, or do you own a retailer at a 25 PE? I think you own the bank. So they've done quite well, actually.